Hey, Ilya, how are you?
I'm good. How are you?
I'm doing well.
Good, good. I'm just sending out invites to those that registered, and we will be able to kick this off in just a few minutes.
Okay.
We might have some stragglers, but we should have people joining. Where is everyone today? It feels like we always have more. All right, Joe, we can just go ahead and get started. And I've sent out the invites. So everyone that's registered for the room will be getting those notifications, and they should be joining as well.
Okay. Let me just turn on my camera here. And are we recording this?
Yes, William, you will be recording this, correct? Yes, and will you make sure that you pin Joe's video feed as well? Just make sure you click on the people button, and then there's a little pin icon that will be next to Joe's screen, and you'll be able to pin him from there. Perfect. Okay, thank you.
Okay, well, let's just maybe, so we have a half hour allotted, but I think we could probably cover this in 10 minutes. But this topic is a very interesting topic. It's interesting because no one really thinks of an escrow account when it comes to buying a home, qualifying for a home, servicing a home. But the more that I spend in this industry, the more I realize that escrow is often a major point of confusion amongst home buyers, homeowners. And so the more knowledgeable we are about escrow as mortgage professionals, as real estate professionals, then we're able to speak more articulately and educate our clients. So first, like, what is an escrow account? So an escrow account, and what's kind of tricky about this, and put yourself in the side of the consumer, is like there's kind of two forms of escrow. You have the escrow, the earnest money deposit that's deposited into escrow to hold as part of the contract obligations to purchase the home. But then after the mortgage is closed, potentially you have an escrow account where the client is depositing money for the purposes of paying property taxes and homeowners insurance. And so both those terms use escrow. So again, this, put yourself in the shoes of a especially a first time home buyer, may not click, okay, this is kind of almost two different ways of thinking about escrow. Also, sometimes it's used as an impound account rather than an escrow account. So this is just lingo that mortgage professionals will use. Hey, we're going to set up an impound account for your property taxes and insurance, as opposed to saying your escrow account. So the an escrow account is essentially, the way I describe it to customers, is a savings account for the purpose of paying property taxes and homeowners insurance. So when the property taxes and homeowners insurance comes due, the mortgage servicer will dip into that savings account and pay the county and pay the insurance agent when those payments are due out of your escrow account, and you will pay every single month into your escrow. And that's kind of how I describe it. And in California, many people don't realize this. In California, you actually get 2% interest on your escrow account. So, like, well, right now 2% interest is maybe below market, but though banks, big banks haven't raised rates that high, but still 2%. You can imagine just a couple of years ago, if you're getting 2% of your savings, like that's actually a much higher return than probably what if you have a big bank is offering. So if you're a homeowner, you get your tax form showing what the interest that you earned on your escrow account. And this is in California. Other states may not have that policy. So when I explain it to them like that about the savings account, that seems to really register with clients that this is actually your money. That's the key thing, because when clients look at a closing disclosure, a loan estimate, what they're really focused on is like the total numbers. And often you need to go through line by line. And when I explain that, hey, you're depositing money into a savings account, that's your money. If you want to sell your home, or let's say if it's an optional, we'll get to the when it's required. Like that's your money that you get back out of escrow account. Okay, got it. And these are just some of the languages that the terms that I use when I'm communicating with clients. And one of the reasons why I kind of dive into escrow account, I've actually created quite a bit of YouTube content on escrow account, and we'll get leads from that content, is because it's the number one complaint of mortgage servicers. So this is something Raul and I know because we used to work for a very large mortgage servicer. And so what a servicer is now is basically they are collecting the payments from the borrower and then remitting those payments to the investor, usually Fannie Mae, or if it's an FHA loan, to Ginnie Mae. But essentially, that's what the servicer's role is. People think that the lender, like this, that the lender holds the note. Again, that different topic, but the technical term of who you make your payments to is the servicer. They're not the lender, because they've already sold the loan. Now they're just servicing the loan. The number one complaint with servicers is dealing with escrow. So you can imagine this happens if somebody is not properly educated. They go buy a home. They create, let's say, an escrow account for their property taxes and insurance. Then they receive a notification. Hey, your taxes and insurance, your escrow account is short. Your taxes and insurance should be X. You need to pay X per month going forward. Freak out. Like we've had clients, like, this is why the CFPB has actually gotten involved, because this is such a reoccurring complaint. We've had clients think that like we originated a fixed loan for them, and it wasn't necessarily me, but like because the servicer was so big, they would get all these complaints. So, and they subservice loans too, meaning like they were basically the servicing arm of all these other mortgage entities. So clients would call in like, I thought I got a fixed rate. Why is my mortgage payment going up? And we had to explain, hey, it's not your principal and interest payment that's changing. It's your escrow amount that's changing. And I'm active on a lot of Reddit posts with homeowners and first-time home buyers that try to share my information and education, and also learn as much as I can. And always you see this reoccurring. What? I just got notice from my servicer, the taxes are going up. How can I do this? And it pains me, because the real estate professional at the initial closing really should go over escrow account if you think your client doesn't understand. So number one complaint has to do with escrow accounts. This is what from mortgage servicers. Now, when is an escrow account required? For an FHA loan, it's always required. Doesn't matter what your down payment percentage. For a VA loan, it may vary by lender. Some lenders are going to say, "Hey, you have to put 10% down." Then it's not required. So if you put 10% down, then it's optional. Conventional, same thing. Some lenders may say, "Okay, you can do it if you put less than 20% down. You can waive the requirement to have. If you put more than 20%, you can waive the requirement to have an escrow account." Some will do it even, up to 5%. Like, hey, you can waive the requirement. Some will make it a pricing adjustment where basically you're incentivized to have an escrow account. Ultimately, if you can have a customer who is putting a large down payment and just wants to have the escrow account. I'm kind of wired that way. Like, I don't want to have to talk, like go, like pay the county insurance. Like I have an escrow account. I'd rather just pay just on the mortgage side. Plus, in California, you get that 2% interest, and my home is in California. So again, I bring that up a lot when that 2% interest, because this is actually like a fun fact. People don't know this. And then here's how escrow account is calculated. So taxes are due based on the county and the state. So for California, taxes are due on December 10th and then again on April 10th. So you need to have enough money in the escrow account to pay the taxes. So for example, let's say we're going to say a loan closes on it's November 7th today. Well, their first payment on the new loan isn't going to be due until January 1st. So in this case, the taxes would actually be prepaid because the servicer is not going to get to the loan in time to make the payment. So anytime the taxes are due within 60 days, servicer on the loan is actually going to be prepaid to the county. And again, got to explain this to the client, because now they're going to set up an escrow account and they're going to be prepaying. But now they have to set up the January escrow account, set up the new escrow account for that April payment. So you have April payment, 6 months of taxes due. So there should be at least 6 months in April, and then March. So that's 5, and then February, that's 4. So January, so 3. So you should have 3 months at least. But there is a requirement. This is not determined by lender, highly regulated. Must have 2 months of cushion in your escrow account. So let's say if in this case we have a loan closing today, you're going to prepay the December property taxes. Then you're going to deposit 5 months into escrow account, so that by the time the April comes around, there's actually going to be 8 months of taxes. So there's that 2-month cushion. So that's how escrow accounts are calculated. It's all dependent on the month of the closing. And this can really impact the numbers. If you've got a borrower who's really, tight, from a cash to close standpoint, well, you can imagine this in this case, this could actually be quite a big deposit that's going into escrow. So if that borrower potentially could eliminate the requirement of escrow, that could be a solution to get that borrower into a home. If it's a borrower that's FHA and we need to have the escrow account fully funded, obviously, because that's a requirement of FHA, then that could really impact that borrower's qualification. So people don't think of this, but the time of the year that you close will impact the cash to close that you need depending on your loan type. So in theory, you could have somebody who could qualify for a mortgage in March, but that same mortgage they may not be able to qualify for in January. So it's really important, again, for consumers to be educated about escrow account, because again, it's the number one complaint of servicer. The number one complaint of servicer has to do with escrow accounts. So we went over how it's calculated. and when it's due. And let's see. And any questions so far? I covered a lot just with escrow accounts. For a lot of you, I think on the call, this is kind of all second nature, but I wanted to kind of share it, at least my experience with escrow accounts, how I handle and how we can better educate consumers, especially first-time home buyers. Any questions like what we covered so far on escrow?
No, I think for right now we're just soaking up the information. Donna, do you have any questions? Nope, I think Donna may just be listening.
Yeah. Well, and again, this is like kind of like very nuanced. When I saw the topic, I was like, oh wow, this is a very nuanced topic. But I actually think it's a great opportunity for all of us, as we are all real estate professionals, but we are all marketers. At least we should be. And I always think about creating educational content that is where there's the most misconception. So like I create a ton of educational content around down payment percentages, because still today, many would-be home buyers don't understand that they can buy a home with 3.5% down, 3% down. They just are totally unaware that that is an option. And which is crazy, but it's there's still people that think, oh, I need to have X per down, 10, 20% down. Escrow account, I have seen so many times firsthand the misunderstandings, confusion. What happens to my escrow account when I refinance my mortgage? That's a big misconception. Why do I need to pay extra into the escrow account? How is the escrow account calculated? All the things that we've covered here, these are great topics for you to cover in your own marketing, because I can assure you that many homeowners and home buyers do not understand escrow accounts, and it really does impact their lives. Like, you should see these Reddit threads, like when folks, especially someone who's maybe buying a new build, because sometimes they're getting in on a tax, on a tax amount that's really low, and then they get the adjustment, and they're like, oh my gosh, I don't even know how I can make my payment. And that was a poor job on the real estate professional side and on the mortgage side, not educating that the escrow account is subject to change. It's really important for homeowners to itemize their mortgage payment. This is the amount of your principal and interest payment. This is the amount of your property taxes. This is the amount of your homeowner's insurance. The latter two, insurance and taxes, those are subject to change. Those can go up. They usually go up. Occasionally you have cases of property taxes going down, but usually they go up. And if they go up, then the servicer is going to do their annual escrow analysis. So the servicer basically will have their different states and different months. So they'll take the 50 states and then they'll break it up into months. So like, hey, this month we're doing Georgia, Texas, and Minnesota and Illinois. So then they will go through and they will calculate what the new escrow amount should be based on the updated property taxes. But here's the thing, it lags. So somebody could be underpaying their escrow account for potentially 7-8 months. So they get a bill for the escrow shortage saying, hey, you owe more because you've been paying less on taxes. You owe more on your escrow. You have to bring the escrow shortage due, plus you have to start paying the correct amount moving forward. And so you can imagine for a home buyer who's maybe not familiar, didn't get this explained, thought this was a fixed payment. Hey, what I pay, my $4,326 per month, that's what I pay, never changes. This is a fixed rate mortgage. You could imagine why they're going to the CFPB, why they're filing complaints, because now all of a sudden, if that $4,300 payment is $4,700 payments, plus they got to pay the escrow shortage, it creates a very upsetting experience for them. So this is why I bring it up, even though it's super nuanced. It actually makes you'll find that with homeowners, this escrow accounts are often a big source of headache. So we need to preempt that headache and be professionals and educate the buyer that part of their payment is fixed, if it's a fixed rate mortgage, but the escrow amount of their payment will actually fluctuate. And even though it says that right on the loan estimate, if they hear it from you, they'll remember it more so than probably reading the disclosure. So I will pause there. Thank you very much, everyone, for joining. Let's use our education, our knowledge to really see if we can help homeowners and home buyers better understand the mortgage process. And in return, we will be looked at as the subject matter expert so that we can grow our business. Thanks, Aaliyah.
Awesome. Thank you, Joe. And thank you, everyone, for joining us today. Are there any last minute questions? No? All right. Well, thank you all so much for joining us today. And thank you again, Joe, for joining us in rooms. I hope everyone has a great rest of their Tuesday, and we will see you all again next time. Have a good one.